It's preparing to go live right now.
What the fuck?
How you doing, Matt?
I'm chilling, bro. What's up with you? I heard somebody picked up Major where you was at.
Oh yeah.
Yeah, you funny. Yeah, you funny. Yeah, you're hilarious. You celebrate people. You feel me? But you like, oh yeah, yeah.
Yeah, I celebrate their accomplishments.
Nah, I feel you. Nah, you do. But that was funny. That was funny.
That's crazy.
Mm, but that's a lesson though. That's a lesson, man. That's a lesson for us all.
Yeah, so well, we're live, man. I think Cedric was trying to come on. He's the Forex King, but
Mm.
I'm waiting on him, but let me get started here.
Oh, this game is over.
Oh yeah, they're getting crushed right now. What is going on, Future Focus family? Welcome to the Finance Focus podcast. All right, this is going to be episode 1. Even though we've done this before, we've done this on multiple occasions, we've gotten together. This is going to be the first official episode of the podcast. And today we're going to talk about inflation. I'm going to give you guys some tools to navigate inflation because that's something that's being speaked about a lot. We were going to talk about some real estate. Some of the people from the chat asked me to, go into real estate a little bit, so I'm going to cover that vaguely. We're going to talk about the cryptocurrency action that's been going on. And then finally, we're going to get into some stonks. I know you guys like talking about the stonks, so we're going to talk about a few of them. And Matt, I'm also going to go through gold just for you. But with all that said, let's get right into it. Which one you guys want to talk about first? Y'all want to go through this inflation stuff? All right, so we go through talk about inflation. Inflation is out there. I'm not sure if you guys are tracking or not, but it's out there, and you can see it in prices. People are kind of trying to mask it a little bit, so there's not a lot of panic that gets put out there. Kind of the same thing they did with the UFOs. They try to keep it down because they try to limit the amount that they talk to the public about. So um, now it's coming out to light. They're doing it nice and slowly. They're releasing things nice and slowly, and the same thing is going to happen with the inflation. Little by little, the Federal Reserve and Janet Yellen, the secretary, she's going to be talking about little hints that are going to, let us know that we're hitting inflation. And it's a cycle. Things go in cycles, and we're going to hit it harder than it is. So how do we navigate through that? So the first thing we're going to look at is the gold chart, because gold is one way to navigate through inflation. It's a way to hedge your bets. As you've seen, a lot of people say that Bitcoin is the digital gold, but uh, Bitcoin has fallen, $30,000 in a matter of days, and it could do it in a matter of hours. Carlos, that's on this conference call as well. He said that he also heard through his grapevine. He was an early adopter inside of Polkadot. He invested in Polkadot before Polkadot was even a thing. So he's got people that are inside the cryptocurrency space, and they kind of warned him. They threw a warning out there for him, and they told him, Bitcoin could fall as far as 13,000. I've been tracking Bitcoin. I've been looking at the charts, and what I see Bitcoin going to is about 20,000. That's where I had it, but he's got people that are saying 3,000. Carlos, you want to elaborate more on what people were telling you without naming names? I don't know if you want to name names.
Yeah, I mean, they didn't offer too much information. They were just saying that there's going to be a huge dip in the crypto world in the next coming weeks, and like we've seen sort of like the numbers be fluctuating a lot in this last couple of days, and I think a lot of people were expecting a big comeback. But the way that they're seeing it is that that is going to go even lower, right? So some people they're saying that the lowest that Bitcoin might drop will be 13K, but it might hover around 17. And obviously, like if Bitcoin drops, then every other crypto kind of just like follows that trend. Um, Surprisingly, Cardano has been the one who's been staying pretty up there in terms of like the value. It hasn't gone up or down too much, aside from like what it dropped like about a week ago. But Polkadot, Cosmos, Ethereum, all of those are just like plummeting, man.
Great, man. So how do you recommend to those that are just getting into the cryptocurrency market? They may have just put money into Bitcoin, put money into Cardano. How would you recommend that they navigate through this situation? What would you advise somebody who's like really new to the space? They want to have money in crypto, but all over you're hearing this stuff about inflation and people are getting scared. What would you tell somebody? We're not financial advisors, but what kind of advice would you give a friend on how to navigate through crypto?
Yeah, I mean, I'm a big believer that crypto's here to stay, especially some of the more established coins. They definitely have some real like um, value in the coming in the coming years, and also like in this new changing economy. I think like it's when you start looking at cryptos, they're basically just another portion that you can add to your portfolio to diversify, right? So my advice is like if you haven't bought in and you've been like sitting on the fences about when you're gonna buy in into Bitcoin, Ethereum, or Polkadot, or any of the other coins that are out there, this is the time, right? Like this, you might be getting a bargain. A lot of people have also been saying that this might be sort of like a push downward for like the bigger firms to be able to buy in at a lower price, and then slowly the prices will creep up again. Like obviously, like no one can really predict what's gonna happen, but it's very likely that that could be the case, right? People want to buy in at a lower price, especially like the big hedge fund managers, especially like the bigger financial institutions that are seeing it, crypto as like a real financial opportunity and something that they're adding to their portfolio, and even like now like suggesting it to investors, right? So like I would say like watch the market, watch how low is dropping, like look at the all-time lows and try to go in, and you might lose a little bit of money, but maybe like it's very likely that it'll bounce back. For those that bought when it was high, I would say just ride the wave, man. Like, if you panic sell right now, you're gonna lose, right? Um, you're gonna lose some money, and like who knows, maybe that would even deter you from like continue to participate in that type of investing in the future.
Yeah, man. Like I talked about the other day, if you get a lesson from an investment, whether you lose, 10%, 30%, 50%, if you gain some, um, any type of knowledge at all, then you gain something. It's not really a loss. So don't take a loss from anything. A lot of people, they see their portfolio go down into red and they automatically get demotivated, and, they want to see green every single day. And I'll be completely honest with you guys. When I look at my portfolio and I see green, or I see one of the stocks or cryptocurrencies that I really believe in, and I invested a lot of money into it, and then I see those double or triple in an amount of time that's less than I predicted, I kind of like, I don't like it, because at those moments I am forced to sell. And when I am forced to sell, it causes a taxable event. I want to be a long-term holder of some of these that I really believe in. But when I see these stocks or cryptocurrencies jump up so fast, for example, Neo, I invested in it when it was $3, and I thought, would hit $15 in like the next 2 years. So I was already thinking I'm gonna get 5x in the next 2 years, but it jumped literally in like a span of 3 or 4 months. After I put $3,000 into it, it was already at it was already at $15. So I sold a little bit, and then next thing you know, it's at $30. I sold some more. Next thing you know, it's at $60. So these things that I really like, now I have zero position in Neo, but these that I really like I want to maintain a position in them, but it's hard to, because they go up so fast. And, as fast as they go up, when the market sentiment changes, as fast as they go down. One thing I'm going to go through right now is something that I made a video on the other day. If you haven't seen it, if you haven't watched the video that I made on it, um, let me open this slideshow real quick. Um, do you guys see considerations on your screen, or do you guys? Yeah. All right. So these are the considerations that I went through when I was making the video, when I was talking about, um, how to navigate through that market. Um, and I'm gonna skip through all of this. This is the stuff that I looked at when I was looking at what cryptocurrencies are in the low risk category, which are in the medium risk category, which are in the high risk category. So I thought about utility, how are they being used? I thought about the scale, current scale, and future potential scale. I thought about the partnerships, who they were partnering with. I thought about investor sentiment, what people are thinking about it right now. I thought about the founder, the creators, and who is behind it. I thought about the retail following, like what's the retail investor saying about it. Thought about institutional following, influencers, the present price, percentage from the high and percentage from the low. And then I created these different risk categories, and these are I'll just flip through it real quick because I already have a video on this, and I go through it. But the reason I'm just showing you this now is that um, you could do this when you're navigating through your portfolio. You could build something like this, and everything in your lower risk category, that's where the most of your money goes. Anything in your lowest risk categories, things that even if the value drops, that long term, 5 years, 10 years from now, these projects are going to have a lot of potential, and you don't really see that they're going to disappear. Even Ethereum, where it's Cardano is supposed to be the Ethereum killer, or Polkadot is supposed to be the Ethereum killer. Ethereum still has an established market. So even if they did come and take some market share, there's still a lot of market share to be shared. So Ethereum, I kept it on there because it's lower risk. Then your mid-level risk, the ones I put in mind were ones that just needed to show me more, or they had catalysts that could be positive that can move them to the lower risk, or catalysts that were negative that would quickly move them to the high risk. And then finally, the high risk category was just the coins that I felt were, something could happen, and all your money would be gone. Like they could go, your money would be gone in an instant. SafeMoon was a really popular one, but when the market dropped a lot, SafeMoon was the biggest loser out of all of them. Like it dropped the most percentage out of all the cryptocurrencies. So that's why I put it in there, even though it's one of the fan favorites. But this is just an example of something you could do. If you want to see the full video on this, it's like a 9-minute video. Go ahead and watch it. I go through my videos, the cryptocurrency playlist, and you'll see the video that I made on here on what cryptocurrencies to buy now. Next thing we're going to go through is, hold on. Do you guys see the chart? Yeah, so this is just the gold chart, and we're just looking at the gold chart through with its 52-day moving average. You could see that anytime you're looking at a chart, you could see that you want it to drop. You want to buy anytime you're underneath the average. But this is just we could look at the 6-month. But yeah, so this is just an example of what gold is doing right now compared to the dollar. This is one of the places you can place your money as a hedge. If the value of the dollar does drop, you'll maintain some of your the equity you have. And if inflation really does happen, what what we think is going to happen, you'll also maintain some of your money as well. And this right here is stocks versus gold and silver. So as you can see, gold is the one in yellow, and this is over the last 50 years. And you can see that gold and has outperformed the S&P 500 and the S&P 500 in red and the Dow Jones in blue. And then you have silver here in gray. And over the last 50 years, it has outperformed all of them. But when we take a closer look at it, we zoom into the 10-year, you could see that in the last 10 years, gold and silver have kind of stayed stagnant. And a lot of that could be what Matt talks about. He talks about them being a lot of downward pressure from short sellers that are like, they kind of control that market and don't let the prices get too overbought. But you can see here that the S&P 500 has outperformed them all. But we'll scroll down. This is another chart. And this right here is right here in black, you have the total return index. And this is the total return, which is basically every single stock in the stock market over the last 50 years, adjusted for dividends, and if those dividends would have been reinvested back into the S&P 5, whatever the stock market. So if you would have gotten those dividends and reinvested them right back into it, this chart right here shows you over the last 50 years where your gain would be. And obviously, you know, gold and silver, they don't really have any dividends or anything like that, but they also don't have massive drops that the stock market has. So this right here is like the fair comparison between the stock market, gold, silver. That's 50 years. So we'll come take a closer look at the 10-year. And you can see that all three indexes, the total market index, the S&P 500, and the Dow Jones, are all doing better than gold and silver. But don't always look at it like that. Like, you always want to see what is gold and silver. You can see it remains stagnant. Like, it keeps its value longer than a lot of other asset classes. So that's another thing to keep in mind. The next thing I wanted you guys to look at was inflation. Like, we're talking about inflation. What are some tools that we can use to navigate through inflation? So there's a few ETFs. Even though I'm not an investor in ETFs, you don't really need to invest in an ETF to see what that ETF is doing. For example, this ETF here is the Horizon Kinetics Inflation Beneficiary ETF. It is an actively managed ETF that seeks long-term growth of capital in real inflation-adjusted terms. It seeks to achieve its investment objective by investing primarily in domestic and foreign equity securities of companies that are expected to benefit either directly or indirectly from rising prices of real assets, so inflation. And what you can do is you can go through these right here, and just click on their holdings, and you could see what they're holding, and maybe you can make your own portfolio out of what they're doing. So right here, and their biggest holding is Texas Pacific Land Corporation. They have Charles Riv Labs. They have ASX Limited, which is the Australian stock market. Is like the Australian S&P 500. They have Archer Daniels. They have Deutsche. A bunch of different options here that are expected, or probably because in the past they have done very well, whether there's been a downturn because of inflation or during a recession. These are ETF that's supposed to do good during those times. So these are some of the holdings that they have in here. They even have cash. So they have $9 million worth of cash just sitting in there, because obviously the value of the dollar can drop, but it's not going to drop as much as, you know, the stock market is going to drop over fears of inflation. And this is just one option. Another option right here, you have the VTAPX, the short-term inflation protected securities index. You could go here and see that the risk potential is less risk, but as always, any investment, no matter what you do, less risk equals less reward, more risk equals more reward. So you're going to have less risk, but you're not going to, you know, get a 5x or 10x. So that's something you got to keep in mind. Maybe it's not always the best thing to do to try to always get a 5x or 10x. Sometimes you want to, you know, have your money grow steadily because it's more secure that way. This is just another option. Then you have the Ishares government inflation ETF. Again, just another option for you guys to have. The holdings in this one are Australian Commonwealth. So this is a product from Australia. This is to our Australian fans out there. You know, Matt and I, we spend some time out there. So I had to throw this one out there because we have viewers from Australia as well. But you have a lot of it's just treasuries. So just bonds that are comprised in here. And you can see the coupon percentage here on the right. You got 3%, 250, 275. So it's supposed to keep up with inflation on average. So you have some lower ones are about 70.75, and on the higher end you have the 3%. But with those, you got to keep in mind that the average that the inflation is supposed to be is around 2%, even though currently we're sitting at around 2.6% on the inflation level. So but what do you guys think about those? What do you guys I don't personally invest in ETFs, like I said, but you don't have to invest in the ETF. You can go and see the holdings inside of any ETF, and you could see what they're doing, and take what you like from it, and then give back what you don't like. Like, don't put whatever you don't like into the portfolio. And that would be something like you don't understand. You've never heard of the company. You really don't understand the industry. What are some other things about inflation that you think they should know, Matt?
Yeah, it's so much to run down. I'm gonna make it quick. So your presentation, I think is spot on. Especially with the comparisons with gold in the market. I know a lot of times it gets construed, um, especially with my message, right? You go with gold over everything else, and no, it's a season play. The best game overall is the stock market. Let me repeat myself. The best game to play is the stock market, especially long-term compounded interest dividends. However, every now and then we experience different shocks in the economy, right? Sometimes it's deflationary periods, sometimes it's inflationary. And what I notice is, especially modern day investors, because the stock market has been doing so well for so long, um, we're not properly hedged, right? So therefore, during the last downturn, people experienced the money printing, right? Hence the birth of Bitcoin, hence the birth of cryptos, right? It's an attempt to keep the system honest. So that's an outlet for the common people, as the power of your currency is being destroyed. And it's misleading, right? Because everybody says, oh, the Dixie's not doing that bad. But what's the Dixie compared to? Other currencies that are being printed at the same rate. So the Dixie could be very misleading. Um, the dollar could go up, and you say, "Oh, the dollar's strong." It's like, no, it's not strong. It's strong compared to the other currencies that's being massively printed. So you just have to keep that in mind. I my last sentence, and again, not to come with the clouds, doom and gloom, but every time we turn on the news, right, and stop me if I'm wrong, there's always $1 trillion deal, right? It's things we do need into some respect, but nonetheless, infrastructure deal. That's the latest thing that they're talking about. Where's this money coming from? You know what I mean? Like, are they going to hike taxes? Are they going to keep taxes the same? More than likely, what I'm driving at is there's going to be more inflationary pressures to come. So something to be mindful of.
Man, you're exactly right. It's not a matter of if it's gonna come, it's when. And when it does come, how hard is it gonna come? A lot of people are predicting that it's gonna be really bad, and you can see it. Even as of recently this week, it was announced that the president is gonna, thinking about doing a $6 trillion package, and that $1 trillion comes out of debt. It has to be debt, and that 6 trillion that just gets printed, that is very much devaluing the value of the dollar. And just that 6 trillion that gets printed again, devaluing the dollar. Where are they going to get the money from? They're going to say, they save from taxes. So not only are you losing because the value of your dollar, even in your savings account, is dropping, they're also going to hit you with capital gains and the way we used to make money, and try to get those 100 baggers, those 10 baggers, those 5 baggers. Like, that's going to cost you more than it used to cost you in the past. So I encourage you to not always just look for those 5, 10 baggers in, like, the span of a few days, because those are taxable implications. Unless you're going to need that money real soon, I would just say try to invest at least in the 1 year, where you at least get a smaller capital gains tax that you have to pay back. Also, for those who are like dodging and not paying attention to what you're doing in the crypto market, especially like on Pancake Swap and BitSwap, Uniswap, the government is going to be able to find what you're doing on those exchanges. So be very careful. There's products out there. I said last week, I'm not sponsored by anybody, so I'm not going to give out names, but there's products out there that you could pay for that are like the H&R Block of cryptocurrency. And they'll go through all your transactions and they'll do all the math for you. So when you file your taxes, you'll have the most accurate product. So if you are ever audited, then you'll be protected. So that's just an option out there to keep in mind. The next thing we're going to talk about is real estate, and I'm not going to stay too long on it. Just my background, I currently have 2 houses, one in Virginia. It's paid off. It's an investment house, and I also have one in North Carolina, which I'm paying off. Well, my tenant is paying off because that was an investment house as well. But in our chat that we have, and if you want to join the chat, just hit me on the email. It'll be in the description below. But in the chat, we have a lot of people have been asking about purchasing houses, and me personally, my goal, my midterm goal, next 5 to 10 years is to have at least 12 houses. And when I'm currently in Japan, I'll be back in the States in this summer. When I'm back in the States, I wanted to go ahead and buy, another house, but with the way prices are right now, I can't do it. I'm even debating selling my house in Virginia, the one that's paid off, because literally whatever I listed for, most likely I'll get it. Just like we talked about inflation coming in cycles, the real estate market comes in cycles as well. So the cycle we're in right now is a seller's market. And what that means is that there's many more people that want to buy a house than there is a supply of houses. So there's less people selling their house. What happens is the home builders, the pressure gets put on the home builders. That's why the price of lumber has been rising insanely, because they're trying to build houses at the cyclic rate. And what ends up happening it's always a repetitive cycle. It's going to be the same thing in the semiconductor space. There's so much demand, and the people that create, like the people that provide it, the producers, they don't want to go through this again. So they end up overproducing. So what's going to happen is there's going to be an overproduction of houses. And then it's going to come to the point where not that many people there's more houses for sale than people that want to buy the houses. And when that happens, the prices of the houses will drop. And that's when I'll jump in and scoop in and buy maybe 2 or 3 houses. But that's just how I'm playing the real estate market. While I do want a house right now, I'm just maintaining my discipline, and I'm going to wait until it's a buyer's market when there's more houses for sale than there are buyers. And then we could pick our price. We'll have more leverage to go in there and negotiate our prices. And it just takes some discipline. It may take a year, it may take another 2 years, but the houses are going to default. A lot of people are getting easy credit and they don't have employment. They're getting that unemployment. Those benefits are about to expire come November. And I don't think they're going to get renewed this time, especially because the amount of unemployment has really reduced. It's about to be where the Federal Reserve wants it, at around 5%. So just something to keep in mind there. These people are going to have to still keep paying their mortgage because they got an easy mortgage. And then, a lot of people are going to they end up being screwed. And what ends up happening, it happened in 2008. It's going to happen again, but not because of the same reasons. Back then it was because of, banks were doing some shady stuff. Now the banks are being really monitored. So now it's going to be more of like the easy credit, the lenient policies that the Federal Reserve and the Treasury have given us. And it's going to come back to bite us a little bit. So you got to be prepared for that, and do whatever you can to be prepared for that. The next thing we're going to talk about is just the cryptocurrency action. They're really down right now. And like Carlos said earlier, just there's opportunities out there. You just got to find it. You could go ahead and invest in the safe moves and the Doge coins if you want, but do it with a small percentage of your portfolio. The big chunk of your portfolio needs to go to the ones that you really believe in and you think 5 years from now, 10 years from now are going to be a real dominant force inside of the cryptocurrency space, because it's inevitable. We're going to transition to that. All right. Maybe not 100%, but little by little, they're going to gain more market share. Especially, like I said, the government is putting us in a lot of debt and they need to get this money back from somewhere. And cryptocurrency is an excellent way to add another way of taxing us on capital gains. So just keep that in mind. The last thing I'm going to talk about is just this Reddit trend, the stocks. AMC has actually, I did some research on AMC this week. and they actually got a lot going for it. I mean, the price may not be exactly justified where it is right now, around $26 and $30. However, one thing that they did have going for it is that a lot of their competitors are actually being bankrupted and going out. So what happens with that is that they end up taking more market share in a city, let's say like New York, where they were competing with Cinemark and other different competitors, small local venues. Now a lot of those small local venues have disappeared. So when they used to split, those people that would, say, I'm going to go to this one because it's closer to my house, a lot of people don't have that option anymore. So now they have, they're going to go to the AMC, and AMC is going to benefit from that. So while they are in a lot of debt, they are positioned now because of all this extra money they got, that they can, end up getting some market share, and it may be a bullish sign for them. So I was very bearish on AMC when it crossed that $10 mark, but AMC does have some stuff going for it. Another one that I wanted to talk about was it's good to pay attention to what the Reddit investors are talking about. So let's look at the most mentioned ones on Reddit. Hold on. Wrong one. All right. Do you guys see the hold on. Do you guys see the list of the companies here?
I only see like a YouTube page that's not loaded.
All right. What about now? All right.
Yeah,
So these are the 10 most talked about stocks on Reddit as of this week. It's good to see, where the next potential ones that are come may be. And what I do is I look at this list and I go through and try to pick up which out of these are actually have potential. You know what I mean? So Rocket Companies is a stock that I bought for my wife a while back. She's currently down on it, but I think it has some potential in here. You got Tesla, which it's gotten actually buy ratings as of late, even though it's up like 3,000%. It's gotten some buy ratings as of late. The one I currently made a video, I recently made a video on AMD. I really think that AMD has some potential. Anytime something's out of favor or there's more demand than supply, that's always a bullish thing for a company. So keep that in mind. AMD, Advanced Micro Devices. Then we got Palantir Technologies. I know that's a big one that people really like. AMC, like we just talked about. And then you got Airbnb and Air Products and Chemicals. And one that really didn't make this list, but as of Friday, it was the number one most, because this one is as of like Monday. As of Friday, the most mentioned stock on the Reddit was Tilray. So that's something you guys can keep in mind as well. Use that while you're investing. Some of these that are some of you guys that are doing options trading. This might be a great tool for you guys to look at, especially coming out of earnings or going into earnings. This might be just another extra tool for your toolbox. Matt, I saw you over there shaking your head. What you got to say?
I'm not gonna say I'm disgusted with the Wall Street bets community, but like, what's the point? I get it at first, but then I don't see any growth. And I know it's early, that's not fair to say, but I see very little evolution in the strategy. You know what I mean? Like I just see, hey, we going along GME, we going along AMC, we gonna take these guys out of their position, and it's like, all right, even if you win, what's the point? You guys already made your point. Is it to hurt the industry? Because if that's what you really want to do, we need you to come over to silver and stop playing around. You know what I mean? Like, well, what are we really doing over here? Like, all right, y'all, you guys still short the same two stocks. Like, all right, that's like watching a basketball player with the same two moves. It's like I need some diversity, and I need an actual goal in mind.
All right, so this is a longer list, and this right here is just a longer list. It includes obviously the GameStop. This is just the percentage here on the right of how many, of the bullish sentiment towards it and the amount of comments for each one. So the biggest one was GameStop. Then you have BlackBerry, Tesla, Palantir, Apple. You have BlackRock, Alibaba, Amazon, Plug Power, Ford Motor, Netflix, Neo, Facebook, Intel, Tilray. You have Wish, Afria, Nokia. You have Corsair. You have AMC, Microsoft. You have GLD. Then you have the two ARK funds. Queen Kathy over here. But as you can see, they do have a bigger list than the one I went through. I just went through like the top 10 ones, but they are trying to diversify. I mean, so they are trying to diversify a little bit. It may not be as much as he wants, but they did try silver, but you already saw what happened. They bumped it up like $4, and then silver is a different monster all on its own. Like,
So I just want to caveat off of that. The U.S. Mint, this is not like a third party. Our actual government, the U.S. Mint, who is under the U.S. Treasury, just came out this week and said they won't be putting coins on the market due to a global shortage. And then ironically, the price went down the same day. So I'll let you do the math on that and how that works. But there's an email circulating around that the US Mint said that there's admitting to a global shortage, and they're having issues sourcing silver. But we'll see how this plays out. It's deep, and you're right. It's a commodity. It's a lot harder but we'll see how this plays out.
all right, well, that's all I really have for y'all. What last comments do y'all have? Carlos, what do you got? You got anything? Any last words? Any last pieces of advice for this week we got going forward?
Not really, man. I'm kind of just watching the market, see how it performs after Memorial Day weekend.
Great. Yeah, just a reminder, on Monday the market is closed. Matt, any last words of wisdom for the viewers?
I think this was a great great interview / presentation. You showed us different ways to play the inflation hedge. But I think and I could be wrong, but I think you're sadly mistaken if you think inflation's over and we're just done here. I think the system is so addicted to money. You need more money now to keep just to keep things normal, just to keep things even kill. So I'm expecting fireworks 12 months within 12 months.
Hey, great points. I wanted to thank both of you guys for joining. Jesus O, I see you out there commenting. Far more money. Thank you for the comment. We really appreciate it. Everybody who watched this, thank you. Don't forget to hit that like button. As always, invest in us and press that like button. Invest in yourself and smash that subscribe button. It costs you nothing. Until next time. Hey, thanks, gentlemen.